to arrive the cost of capital contributed by the directors or the I can say the main promoter in the
Okay.
company or in the partnership firm?
Okay. Okay. Excellent question. Excellent question. Absolutely. So the question is, the cost of debt is not a difficult job to calculate,
Right.
because cost of debt is given to us. We know as to what the cost of debt is. We only need to adjust it for the amount of the tax that we would save, because it is interest, which is a deductible expense. How to calculate the cost of equity is always a challenge. And why it is always a challenge? Because unlike in case of debt where you have an explicit cash outflow happening, in case of the equity as a capital, there is no explicit cash outflow happening, and therefore it is not as simple to calculate the cost of equity as it is in case of the debt. But there are models available for the purpose of calculating the cost of equity also. Now, generally speaking, Dinesh ji, uh,
Yes, sir.
the cost of equity is considered to be the opportunity cost. Meaning what? Meaning, if as a promoter, if as a shareholder, if as an investor, if I would have invested this money which I am putting into this business, if I would have invested it somewhere else, how much return I would have earned on my capital. So that is one way of looking at and finding out as to what is the cost of equity. But this is all subjective, and not only is subjective, it is very difficult to freeze it as to what can be the opportunity cost in case of one person or different people. So the opportunity cost is going to be different for different people, and therefore it is difficult or not possible to pick up opportunity cost for the purpose of calculating the EVA. So then what do we do? Then we use a model which is known as capital asset pricing model. So how do we calculate the how do we calculate the cost of equity? By using the by using the capital asset pricing model. So first of all, what we do, we take a figure which is known as RF. RF is the risk-free rate of return, which you can simply pick up the interest applicable in case of in गवर्नमेंट ऑफ इंडिया 10 years बॉन्ड. सो जो गवर्नमेंट ऑफ इंडिया है उसके जो 10 साल के बॉन्ड हैं, उसके ऊपर जो रेट ऑफ इंटरेस्ट है, दैट इज पिक्ड अप एज रिस्क फ्री रेट ऑफ रिटर्न. सो एंड वाई रिस्क फ्री रेट ऑफ रिटर्न? गवर्नमेंट ऑफ इंडिया का बॉन्ड है तो कोई रिस्क नहीं है, पैसा डूबने का कोई रिस्क नहीं है, और उस पर जो मिल रहा है, तो इसका मतलब अस्यूमिंग कि आप कुछ भी ना करें तो कम से कम उतना तो कमा ही सकते हैं. So if you have to find out the cost of equity, so how do you find out the cost of equity? We start with the risk-free rate of return. Then we take a figure which is known as beta. Now what is beta? Now beta is the risk factor. Beta is the risk factor. I am sure all of us are aware, but just to put all of us on the same page, it is the covariance between the return on the market and return on the company. So depending on this beta, so beta can be positive, beta can be 1, it can be less than 1, it can be more than 1. So if beta is 1, that means if the beta for a company for which you want to calculate the EVA, if the beta is 1, that means there is the risk of the company is same as the risk of the market. If the beta of a company is 1.2, that means this company is 1.2 times riskier than the market. So you take the figure of beta, and then what you do, you take the market return. You take the market return. So that means if I would have invested my money in the market, what return I would have earned, and from the return on market you minus the risk-free rate of return, and this is how you will calculate the cost of equity by using the capital asset pricing model. To put this formula in the numbers, so let's say the risk-free rate of return is 10%, and beta for this company is 1.5%, and the return which is available in the market is 10%, and your risk free rate is 7%. So your cost of equity is going to be 7 plus 1.5 into 3. So that means 7, this 4.5, so 11.5. So for this company, if you want to calculate the EVA, then you can take the cost of equity as 11%. I hope this answers your question.